Hi, everyone. Welcome to Crowd Forecast News, episode number 166 for January 8th, 2018. This is the first episode of the year, so welcome to the show. We will be discussing the 224th weekly report, which you should be seeing on your screen while I'm talking. And if you haven't had a chance to take a look at it yet, you can go to TimingResearch.com to download the full PDF there. I do have the live chat open on the YouTube page, so if you have any questions or comments during the show, you can type them in there. And my name is David Kosmeter. I'm the creator of TimingResearch.com, and I have Rob Hanna here to moderate today, so I'm going to go ahead and turn it over to him.
Thanks, David. Good to be back. Happy New Year, everyone. Looks like we got another interesting panel here put together, so why don't we get to some introductions, I guess, to start before we get into the market forecasts. I will just go down the list as I wrote people down, which is David had them listed in an email earlier or this week. So Toni Hansen of ToniHansen.com. I think you're new to the show, Toni. I know I haven't gotten a chance to speak with you before, but welcome aboard. If you could tell us a little bit about yourself, about your site, your trading experience, and what kind of things you like to trade and so forth, that'd be great.
Okay, sure. Thank you guys for having me here today. So I've been trading for, just over 20 years now, and started out as a stock trader, basically holding for about 3 to 5 days on average. And since then, I've gone to doing Forex, futures, basically every other market under the sun. So I have everything from short-term trades to where I'm just day trading intraday to holding for position trades. And it really just depends upon what's going on in the market at any given time, and how much time I have to devote to doing research for different markets. So I'm kind of into a little bit of different stuff. I've been doing short-term stuff probably for the last couple of months, really, focusing on Forex and futures, mostly the NQ, as well as trading a lot of the gap trades. So like a lot of the stocks that are gapping on earnings or unexpected reports overnight. So focusing on those mostly right now.
All right, interesting. Thanks, Toni. Look forward to hearing your views some more. Larry Gaines from PowerCycleTrading.com. Larry, could you tell us a little about yourself and about the site?
Having me here today. And so I've been actively trading for over 30 years and actually started my trading career out trading oil. Went on to run a really large oil trading desk, and we traded pretty much everything from oil to foreign exchange to markets. So I've got a lot of just experience over a lot of the different commodity markets, and started up Power Cycle Trading in about 2010, and we just kind of focus on directional trading using our directional trading models, and then using options, for controlled risk and leverage to trade those trades. Like to trade kind of shorter duration, swing trade type cycles, anywhere from 3 days to 8 days, something like that. And like to use a lot of, momentum based type of breakout trades. That's the kind of stuff that we're looking for, momentum type of price action, and then, jump on those using options for controlled risk.
All right. Excellent. Thank you. So let's go to Glenn, Pacific Trading Academy, Glenn Thompson. Could you tell us about yourself and about Pacific Trading Academy a little bit?
Sure. Thanks again, Rob. Very similar to the previous my co-panelist here. I've been trading, let's see now, 36 years, and started on the equity side again 36 years ago, and then about a year into that, transitioned to derivatives, and initially was doing energy and Forex and currency futures, and so that's kind of what I still do. I do 80% of my personal activity is involved in day trading E-mini. In the last year or so, I've kind of shifted my focus out of the E-mini just for convenience to Forex in my personal accounts. For the last 14 years, I've been teaching with PTA, Pacific Trading Academy. So I work in my official capacity as a mentor, and I work with all levels of traders beginners to experts and everything. My focus is technical analysis, so obviously it has a breadth of instruments I can look at. But again, I primarily in my own accounts focus on the E-mini for short-term plays. I do a lot of options trading and what Larry was just saying, you know, hedge portfolio type activity. So yeah, that's pretty much it. But as far as my teaching is concerned, depending on the interest and objectives and the needs of the student and traders that I'm working with. The only thing I don't infrastructurally teach is fundamentals. Ironically, I started my career, and the very first book I read was Fundamental Analysis by Benjamin Graham, but that was, again, when I was 24 years old, and then I'm 60 now, so it is what it is. So you learn a lot fundamentally, but for me personally, unless you've got very, very large equity resources, I was not able to make it work consistently. When I began to incorporate the technical approach, I saw some positive results on the equity curve. So yeah, that's what I do.
Excellent. Thank you. Well, it looks like we got several traders here. I mean, I guess all of us have kind of a swing time frame, which fits well with a lot of the questions here, so that's good. A lot of experience in the panel, too. To give you a little background on myself, I started trading probably about 20 years ago, also late 90s. I've traded with a quantitative tilt since 2004 or 5. That's when I started doing some quantitative research. In 2008, I opened a site called Quantifiable Edges. I still run that site today. And that looks primarily at ES, but I also do some ETFs and stocks there. And then in 2012, I opened a site called Overnight Edges, which looked at trading futures overnight, primarily index futures, being the S&P and NASDAQ. And then that site merged with a site called Master the Gap in 2014, became InvestiQuant. At InvestiQuant, we look at overnight edges, intraday trading, and I've brought a swing tilt to that as well. So Scott Andrews was the intraday expert, and he continues to be over there. And I focus more on the overnight and the swing stuff. So that's where I am. I don't trade as broad of a selection as the rest. I think everyone else mentioned Forex and or energy or currencies and oil. I just focus mostly on equities and equity indices, ETFs. I do trade volatility some, so I'll trade some VIX products as well. All right, so let's get to the questions and start off with the first. Let me just get a quick reading on the panel of where we are before we dive into our reasons for being bullish or bearish this upcoming week. So really just looking for 1 to 2 word answers here. Are you thinking the market's going to move higher or lower from today's open until Friday's close? And then I'll come back to you and we can expand on our answers here. I'll go first here. I'm leaning higher for the next few days. Glenn, what about you? You looking higher or lower?
The same, higher.
Same. Okay, great. Larry, are you looking higher or lower for the next few days right now?
Sorry, I had it on mute. Lower.
Oh, okay. Lower. Oh, good. All right. Now we'll have some disagreement.
Yeah.
And Toni, how about you? You looking higher or lower?
I'm a little in between you guys. So I'm looking with the possibility of a bit higher, but more intraday swings, some wider swings back and forth over the next couple of days.
Okay. All right. So we'll have some more lively discussion. I hate it when everybody's all in agreement on this thing. If everyone's got the same perspective, we don't get a whole lot out of talking to each other. So, Toni, why don't I start with you then? Can you rate your confidence in you know, it sounds like you're not overly confident in higher or lower. You're more neutral. Can you tell us some of the things you're looking at, or that are making you feel that way?
Sure. Yeah. So if you guys can see my charts up here, I'll open up these a little bit wider. So this is the daily, what we're looking at. This is the NQ. So we're looking at some E-mini futures here. And basically what we're seeing is that as this has come up over the last week or so, we've had an impulse move, which is of course the primary direction of price action, that's been very similar to what we've seen a lot over the course of the last 4 months or so, before we've seen corrective action. And now granted, this action here this past week has been much stronger than a lot of the previous ones, but even with those, what we usually see is that things will start to slow down. We'll start to get some choppier action. So like what you have back here, where we've had that strong move to the upside, and then there's a lot of slowdown as far as that upside momentum goes. So that's basically what we're starting to see up here. We are breaking out of this upper channel. So basically, I think we'll see a little bit more upside continuing, but it's not going to have that same strength that we saw earlier last week, where we had those really strong bullish days coming out of the lower end of the channel.
Okay, excellent. Larry, do you're lower right now, so you're thinking we're headed down. Is it an overbought thing, or is there a lot more to it than that?
Just overbought. I mean, it's been a tremendous bull run, and who wants to get in front of the freight train? So I'm not, not bearish by any means, but just from the standpoint of how much we've run so far, just last week being the first week of the year. And just looking at some, kind of technical indicators that I like to look at. And basically, if you can see my chart, this is a weekly chart on the S&P 500 SPX. And so these dots here, this is just an extreme range band, average true range. So it's like 3 ATR. And I haven't seen it this extended. And you have to go back to quite a bit of history, go back. But you can see this is a weekly bar from last week to currently where we are. And it's way extended over this ATR level there. So
that's the average weekly range that we're looking at there?
Yeah, this is an average true range based on the weekly.
Okay.
So you can see how extended it is, based on that. And then also I like to look at when it gets super extended from this 21 exponential moving average on a weekly. So to me, it's it's not a market to be chasing up here. Just sit on your hands, be patient, but look for specific, stock selections. But from the index itself, I think it's a little extended.
Yeah, I certainly agree with that. It's one of the things I've been, over the last few days. It's to me, it's at the point where it's too overbought to buy, too strong to short.
Exactly.
Yep, I agree with you guys.
All right, and Glenn, what's making you think it's going to go higher?
Sure. Let me see if I can get the right buttons to share a chart. Let's see here. Oh, hold on 1 second. Maybe not. You have can you guys see the chart?
Yep.
Are you able to see it?
Yes.
Okay. Yeah. So this is an hourly ES, the hourly ES. Essentially, I agree with bits and pieces of what both Larry and Toni said. I should add that I don't think that in all the shows I've done, I've never been as bullish. I'm gonna say 90%. That by Friday, being specific to the question, the ES will be higher relative to today's current price. I think we're trading at what are we, 27.44 and change. I agree. I think Toni said that there should be in the next couple of days swings, but net to net from today's close to Friday's close, I'm pretty certain, and there are a number of reasons why. First and foremost, trend strength. And I agree with Larry's point about the market being a little overbought here, and with respect to some of the ATRs you can look at. That said, consider why. You know, it's either that it is truly overbought, or there may be some real world external factors that are responsible for the momentum we're seeing implicit in the trend. But clearly, two things I want to point out that as to why I'm so bullish at this point. Again, in this window between now and Friday, the trend strength, as indirectly indicated by the magnitude of the pullbacks. I think Tony mentioned, if you look at the history, if you go back on a daily time frame, you can see the swings. I agree with that. I would add that the size, as measured by both time and price, are pretty shallow or pretty muted with respect to the impulsive portions of the move up. You go back on a long-term chart, daily, weekly, and as observed here on this hourly. Just look at today's trade. Look at this pullback. It's 50%. As a gross kind of line in the sand point, anything less than 2/3% pullback of a given impulse. So if you just look from this move here up to the current top, you can see a little pullback here. It's at the 50% Fibonacci. So the fact, and then you can see the compression, little triangles, and then impulse. And you can see this little triangle here, impulse. And you see this pattern of repetition. This is just on an hourly little micro view. I can go down, you could go down and see the internal fractal, but just take it back up to the daily for a second. And you see more or less the same, just a larger representation as observed as you would expect. Look at this going back, a little thin back here in the spring, but just starting from here, the impulse, now that's a deeper one, but if you look from this little move here up to here, that's about a 50%. You look from here to here, that's a 38 or a 26, whatever it is. Look at that big move. That's very small percentage retracement. You got this pattern. Look at this last move, whether you take it from here, this bottom right here, middle of December, through the obvious pivot top, December 18, a few days later, look at that little triangle. Now that's a little, but if you just look at the activity since the end of the year 2017 to where we are now, look at the pattern of succession of higher and higher tops. Yes, it takes a lot of nerve to continue, and there is that qualitative argument that do you want to buy, or look at the slope as indicating the velocity of trend, and surely that might mean that we're nearing the top. Here's my way to kind of provide the emotional safety net. I've got confidence in a zone of resistance that I projected at 27.71. So we're at 45. So it is what it is. I think if we hit, depending on whether we see volume supporting the price in and around the 27.71, then I think that would be a determiner as to what you should do and how to create a strategy. But it's up and away. So that's just everything I just said is based on the trend. But here's from a fundamental cause and effect standpoint, my real reason why I've never been 90% bullish, on one of these shows. And the reason is today, and this is my area of research, is timing, market timing. I've got a cycle that happened to have come in today, indicating a turning point. My next cycle, for which I've got about 6 different factors that converge this Saturday. It happens to come in on a Saturday. That's my time point. So the inference from that is, assuming what you look at the market, what it's doing now, the current state, if the market should turn, which is the implication of a cycle point, say, coming in at the end of the week on Saturday, so assume Friday by proxy, if on the assumption that you have a continued momentum, what's it doing? It's going up. That's why I'm so bullish right now. Essentially, the primary fundamental factor is, if it turns on or around that cycle turning point, which I projected to be Saturday, so Friday basically, Friday or Monday, and on the initial assumption of persistency of the current type of regime, that's why I expect it to kind of, whether it's going to be a blow-off or a crash or a correction, I don't know, but it does provide my significant, at least fundamental reason or rationale as to why I expect a continuation of motion on the current type of price action, that cycle turning point coming in on Saturday. Yeah.
Glenn, I might have misheard you, but did you say you've got a cycle turning point today?
Yeah,
Another one Saturday.
Yeah, it came in at AM, like at 4:07 a.m. Pacific time.
Okay.
So 7 in the morning back east, but or whatever your time zone is. So now
So,
how I
I'm sorry.
okay, go on.
Let me
Sure.
make sure I understand. So if there's a turning point today, and we've been running up fast, doesn't that suggest there's a change to that?
Yeah, exactly. Let me explain.
Okay.
Yeah, that's one takeaway of interpretation. I wish it were that easy. In the real world, to broaden the context of interpretation of what a turning point means, it means change. Obviously, one type of change, the most blatant and obvious and easiest to trade and respond to, is an absolute trend reversal where the market stops going up and goes down, or vice versa. But you have to allow or incorporate into a broader concept of what it means to turn point, meaning continuation. Given the price action today, and also the fact that it came in the middle of the night, or even my time, or even if your guys are back east, whatever, I am surmising, and based on everything I'm seeing in the micro stuff I look at, it looks to me like it's more like a continuation, factoring in everything else. I don't really
rate than next week or than the last.
Yeah, it could be. Yeah, that's another thing. When a change could mean it could tilt. This thing could slow down maybe or accelerate. Okay. But the particulars, I got like 3 to 6 different cyclical factors coming in that happen to kind of all converge on Saturday. It's inconvenient that it comes out on the weekend, but what do you do? By proxy, you look at the surrounding dates, Friday. So, and plus also a little background, I don't really see fundamentally any major events news-wise, coming in this week. You got, what is it, CPI and retail sales at the end of the week. So we're basically on the momentum on the back end of, what is it, last Friday's non-farm payroll report. So that did what it did to the US dollar, but more or less, for whatever reason or reasons, fundamentally in fact, vectors that are pushing this system right now, the equity market, it likes it. It's being supported, and also at a nice velocity. Look at the slope. Yeah, if we can get through today's action and we close higher, or even an inside structure like what we had, that tends to correlate 70% of the time with continuation of what precedes it, that's quite bullish to me overall, Mike, on small scale and large scale. So I'm working. If today turns out to be a strong key reversal, then I would, in retrospect, want to change my view. Anything other than that, I'm still very bullish. And then given the fact that my next anticipated change is at the end of the week is why I'm so bullish. Yeah, so okay. It's a combination of the obvious blatant trend strength we're seeing. In this case, yeah, I agree, Larry, with your point. We're overbought. We're exceeding some of the important ATR levels, etc. But the fact that you've seen this pattern over and over on a multiple of scales, the daily, and the intraday levels, the compression, the little triangular continuation structures and consolidation, followed by strong impulses that have some persistency, suggest that we're going to do so into the end of the week. Even though we're going to have swings. I'm not saying it's going to keep going. I would love to see this thing keep going like that, but we may have some back and forth. But by the end of the week, I think we'll be higher. My critical zone of my underlying support is first level is 27.36. Below that, 10 points below at 27.26. Below that, 26.67. So, and then again, my overhead resistance is 27.71 area to get kind of price parameters in there.
Okay.
Yeah.
All right. Yeah, I hear oops, sorry, I had an echo there. I still do. Someone's mic got their computer on. Could you turn your computer volume down, please, if that works? Thanks. And if someone else wants to jump in to respond to Glenn or what I'm about to say, that's fine. I want to come back to Toni and Larry and get your views on all this stuff as well. With regards to it being such a strong move and so overbought, I looked at a few things this weekend that I found interesting. One is I noted last week that the SPY gapped up every morning and never closed that morning gap. So we had 4 unfilled gaps in a row, and looking back at the history of SPY, that's the first time it's ever happened. So that's a real indication of strength that, not only is it gapping up in the morning, but it's getting bought after it's gapping, and never even come back down to yesterday's closing price. And we see that once in a while, but 4 days in a row is first time ever. It's also an unusually strong way to start the year. Just closing up 4 days in a row to start the year is a fairly unusual thing. I look back to 1961 for the S&P 500, and this was only the 9th time. So the previous 8 times, the market was higher, looking out 50 days, looking out 200 days, looking out 250 days, which is about a year, trading days I'm talking, every time. And then I also looked at 100 and 150 days, and it was up 6 out of 8 times for both of those. But if you look out 250 days, not only was it up every time, but the run-up over the course of that year was higher than the drawdown during the year. So, you can't read a whole lot into 8 instances, and it's really just 4 days we're looking at here. So, it may not mean a whole lot, but I did find it interesting. And another interesting about when I looked at it was that 4 of those 8 instances saw the market already at 200-day highs. So it wasn't like it was 4 up days in the middle of a trend or coming off a low. A lot of times it was in a momentum type market, and that market did continue higher for the next year. So maybe gives us a little bit of hope. We'll see if it turns out the same way as it did before. One of the things that I look at on a consistent basis, not just little studies like that, is the InvestorQuant Swing Edges guides. And what they're showing right now for the 5-day period, if we're looking at the S&P, it's suggesting a 62% chance of a close higher on a Friday, with an estimated profit factor of 1.49, which basically means you would expect gains over time to outsize losses by about 50%. All right, and so that's a pretty strong indicator for me. The 1 day and the 3 day are also pointing higher, and among the systems, really seasonality is one of the stronger ensembles we look at. I look at acceleration, meaning how fast is the market moving, where is it coming from? I look at momentum, and I look at seasonality. And all of them are showing bullish numbers right now. Seasonality is showing the most bullish at this point based on our 1, 3, and 5 day seasonality systems. So those are the reasons I'm thinking, yeah, we're likely to continue with some kind of momentum this week. But like Larry said, we're certainly overbought, and to me, it feels like, if you're not already in it, it's a pretty risky place to be looking to jump in. So as a trader, I'd be looking for a lower risk entry. I'd want to see it pull back to some degree before I'm going to be getting excited about jumping in ahead of it this week. Larry, is there anything you wanted to add? It sounded like your mic was maybe coming on in response to Glenn or me, or.
Well, you just can't argue with the trend. It's huge and strong to the upside, and any pullback's been very, very small. So, but it's just from a trading standpoint, like you said, the risk of jumping in now is a little bit greater. So that's the only thing I'm looking at. When you look at these extremes, how extended it is, it doesn't mean it can't keep grinding higher and higher and higher, which that's what it's been doing. But, just to take a course of action from a trading standpoint, just to be a little bit more cautious with this big, huge move and the extremes, kind of extension that we're at. So that's kind of where I'm coming from, just like you were kind of addressing there.
Yeah. Good place to be trailing a stop, right? If you're already long, but it's tough place to be, chasing.
Initiating things.
It sounds like we're more on the same lines than you were hoping. You were hoping for a more lively debate there.
You're right. We're taking different view. Neutral. I think it's good. Glenn thinks it's going higher. Larry thinks it's going lower. But we're all thinking it's kind of risky at this point.
I think if
Rob,
you can go for like the absolute higher or lower, I would agree with that the price is probably going to be higher. That's what that's the direction I would go for. I think that just intraday, we're going to see some bigger swings on the downside than we've seen over the last week. So just kind of widening things up, but still with that bias where it can still continue to edge higher.
Yeah. Hey, Rob, strategically, I like what you said, or I'm not sure who said it, or Larry or somebody. You know, if you want to play the shorter term horizon between now and the end of the week, look for the pullbacks by whatever mechanisms you determine such. Fibonacci, the gaps, that was a great point you brought in about how you've seen a succession of gaps, and gaps are twofold in inference in terms of, oh, it's going to be filled. Yeah, but more immediately interpret the gap as an indication of strength in the direction of the gap. But overriding all of this, in spite of the extreme levels that we're seeing the index move to, you know, Isaac Newton had it right. Inertia is carrying the day currently. If you're scared by that, then look at a longer term horizon. If you want to play it and you want to be a little, albeit a little cautious, going intraday and then utilize those pivots of support. But if you're not, or if you're long and you're and use the zones of support and trail stop as a strategy. And if you don't have heart for this, wait till next week or some, a new regime occurs, and then look to establish a new position. But yeah, I agree. It's hard to argue with the consensus view here right now.
Yeah. Are there any concerns? Maybe I'll start with Larry, I guess. Do you have any big concerns for this upcoming week? Is there like a support level you're worried about? Is there a news event you're concerned about? Is there something you're really watching that would get you to say, hey, this is something's changing here?
I don't see any big news factors coming in, other than some geopolitical thing that we don't know is going to happen. I mean, it seems like, North Korea's there, but nothing seems to happen, but who knows? And other than that, I don't really see anything on the horizon this week that's major news events. So I think it's just kind of a steady kind of grind or potentially churn sideways, or you have that intraday possible volatility, but that everybody's so dadgum bullish that, something triggers from there. But I mean, all last year, you kept looking at, these seasonals, and you kept looking at, sentiment and all the different sentiment indicators that I've followed over years and years and years. None of them ever really worked last year because, usually they're a contrarian indicator. So when everybody's kind of bullish going the same way, you think, you might get a little bit of a counter trend, kind of reversal, a little bit of a reversal or reversion to the mean. So that's all I'm looking at, strictly technicals right now.
Yeah, you bring up a good point there with the sentiment. I mean, like I saw a note over the weekend that the AAII Bull Bear survey has the biggest spread in years right now.
Yeah.
And a lot of people will use the VIX as kind of a sentiment gauge too. It's not really sentiment, but it just keeps going lower and lower and lower, right? I mean, it came within a few seconds of closing at an all-time low at one point last week. I think it closed at 9.15, and 9.14 was the low, and if it had closed a few seconds earlier, it would have established a new one. So we're seeing really low volatility, and everybody's bullish, but for everybody to flip the other way, it takes some time, right? It's rounded tops, V bottoms type thing.
Yeah.
And if Tony's, to Tony's point, often you'll see volatility ahead of a real price top too. So we'll hopefully get some warnings with some volatility if something's coming. One concern I have is, and it's not necessarily for this week, but the Fed has been reducing the size of their system open market account by $10 billion a month, over October, November, December. Sounds like a lot of money, and it is to me, but it's not to them. So if I take a $10 billion loss, I'm in trouble. But they're increasing that now, starting in January to 20 billion, and that's going to be for the next few months. So, and then second quarter could go to 30, and it's going to keep going up until fourth quarter of this year. It could get to 50 billion, and then they're expected to hold it steady there. When we've seen big reductions in the system open market account, it's made for tough times for the market. Now, 10 billion didn't seem to do a whole lot. Maybe 20 won't. Maybe it'll take more and more. But at some point, I got a strong feeling it's going to matter, that we're going to have a liquidity issue, that the market's going to feel it. So that's one of the things in the back of my mind as a trader right now. Anything you're concerned with specifically, Glenn?
It's curious you mentioned that. That's one thing that I kind of keep track of, and from an intermarket standpoint, I kind of just let me see if I can hit the screen share thing. Look, I follow bonds, intermarketly. Hold on, screen share. Where's my chart? Yeah, this is a daily 30-year Treasury. I am currently bearish. This is just a little snapshot of a wave count. Here's your 1, here's your 2. This is a classic looking 3. You got a little triangular type, if not perfectly formed, 4. So conservatively, I can see nominal bond 30-year Treasuries down into the 150.5 area or so. I don't have a beat on the time of this, but to that, and so interpreting the 30-year bond as a leading harbinger of what to expect in stock in the broader equity sector, it's bearish for both longer. That's kind of a more macro view. So
yep.
How that factors in with the operations by the Fed, we'll see. But that's something that I look at. Yeah. Clear.
Okay. Yeah. Interesting. Keep an eye on the bonds too, right? Mm-hmm. Tony, what about you? Is there anything that you're looking at closely or concerned with this week or a little bit longer down the road?
It's interesting that Glenn mentioned the bonds, because I had just sent out a tweet about that just before we went on the air. I was also looking for the short side over the next couple of days still on bonds, that I do think that we're still going to see a little bit more weakness come in. When we look at the daily time here, we've got our 3 highs. We've got momentum shifting into that last high. Yeah, it bounced pretty well here about 2 weeks ago, but it's come back down now, and now we're basing along here. So it's very conceivable that we're going to still see that continue to pull back down into that zone of those previous lows. So I don't know that that's going to be really something that I use as a lead for how I'm trading the overall market, but it is something that individually I was looking at as we went into today and the rest of the week as well. I think when we go back to looking at the overall market and we look at, let's say, I'll pull up the NQ here. So when we're looking at the current action, we'll see that over this last swing, we've pulled down to about that 50% fan. It was about the let's see, what was it, the 38.2 on the SPY up here a second ago, or 23.6. So we had it up at the 23.6 zone on the ES. So we were, we're at those levels, and I think that what we will see is as we go and retest this upper end of the channel, we can get even a couple more swings in there, and we'll probably get one more kind of bigger swing and then even still hit a later high. I don't know if it can do that by the end of this week. This is where, when I said, okay, where is your sentiment as we head towards the end of the week, where's the market going to be? If we're in that period of where it offers that little bit of a larger pullback, it could bring it back into the zone that we will see for today. But obviously with the open, I still think it'll still be a little bit higher. But that's what I'm looking for. So I think that playing off some of those wider ranges with these Fibonacci fans. Of course, if you guys use like the retracement levels, those are great as well. I like to use the fans because they kind of give you that timing element so that you know, have these corrections formed long enough to sustain another move back into the highs. And usually when they're coming off of these fan levels, that's where you can get some of those reactions. Even when our NQ here didn't pull back, didn't really, get too much movement here heading into this morning overnight trade, it still reacted to that level and based at that zone. So I use these a lot to help with the timing on those smaller time frames.
Interesting, yeah. You're viewing the bonds too. That looked like a really choppy chart to me. I'd have more trouble inferring much from that than. So I didn't quite see what you were seeing there as far as heading down. But but I don't trade a whole lot of TLT. So
if you look at the 10-year, it's a little bit cleaner. If you look at the trend on the 10-year versus the 30-year, the 30-year is super choppy because nobody really wants to liquidate, these big institutional funds, they stay long the 30-year. But if you look at the 10-year, that's the one that's just, been really kind of pushing lower as far as the downtrend.
Okay. Let's jump over to, well, I was looking over some of the answers that people gave as far as why they were thinking higher or lower, and some of the things that we haven't touched on, I guess. There isn't a whole lot. I guess tax reform is one thing I'm seeing on the list here a little bit. But maybe that's going to continue to help, but that's yesterday's news now, right? I don't know.
I think a lot of that was already built in before we went into the most recent rally. I mean,
yeah, I think so.
Nothing's really been a surprise lately.
Right. Yeah, I agree. So why don't we get to the question of the week, which is, to me, I don't know that we'll have a whole lot of, well, it'll be interesting. You guys trade a lot different instruments than I do. So your responses may be more interesting here. And I'm wondering further, not only, what was the most, the question is, what do you think was the most profitable for you last year? Was it cryptocurrencies, futures, options, stocks, ETFs? And then I guess what I'd ask you is, for this upcoming year, do you think that'll change? Are you looking to change your strategy? Looking at the report, it said 2.6% of people said they made their most money in cryptocurrencies. But I can imagine that there's more people going into 2018 thinking about trading them than there was a year ago, especially since we now have futures in them. And I saw yesterday that they've already applied for the 2x and 1.5x ETFs in both directions on those things. So should keep everything nice and volatile there, I guess. Tony, Glenn, let's start with you. What type of asset did you make the most profit in 2017?
Yeah, Forex.
Okay.
My Forex trading, and I focus mostly on that. And again, my strategy is looking for certain convergences between price and time. And I typically, I guess my window or scale of observation and activity is intraday, but I allow for the possibility for, if I'm in a winning campaign, for it to hold it for a few days to even longer potentially. But usually the average window is maybe a couple of hours to a few days to be in a position. So for me, I guess my analysis centers again on three things: looking for strength of momentum of trend that overrides and is the bottom line. then if I look under the analytical hood, in a sense, I want to see, do I have some time parameters that are supportive in reconciling with that? And lastly, I guess in the hierarchy of tools that in relationships I focus on, you know, a little Elliott wave and Fibonacci and things like that. That said, everything else I'm aware of, you know, to lesser extents, but those would probably round out the top 3 modalities that I attach some degree of importance to. Rarely do you get them all kind of tuning in resonance perfectly, but more or less that's my reference of standard. Again, trend, some timing relationships, and then lastly the wave structure. One of the things, I guess, one of the reasons why I've focused mostly on the forex, the purity of the price action. If I see a particular pattern, whatever, a Fibonacci-based pattern, a timing structure, whatever, I'm seeing 75% correlation. You'll see it in other markets. I just don't see it as consistently as strong as I do in that particular sector. And then you can break that down depending on the particular pairs you're looking at. Some are purer. I happen to I do a lot of trading in Kiwi and New Zealand USD, so that's not the most liquid of, you know, the basic 8, the primary 8. But for various reasons, I've had some success there. One other point, to your point about the crypto stuff, I think you said it was 2.6% penetration, or currently. I wouldn't be surprised if, you know, the hype on that is just going to, you know, a year from now where we'll be, especially given the fact that Bitcoin leading the pack, we're going to have a lot more out of the gate, Ethereum, Ripple, all the others that are out there. But someone told me the other day that the margin on the futures for Bitcoin is like 50,000. I'm just curious. That's a little pricey, but, you know, as a percentage relative to the market, I guess it's appropriate. But I'll be interested to see, because I'm not fully or as fully as up to speed on the details and the nuances of the crypto market, but I want to get there because I think it's, you know, there's a lot to it. So we'll see.
I'd heard, and I could be wrong because I haven't traded the Bitcoin futures yet, so someone correct me, but I thought it was 50% margin. So if
maybe I misheard. I talked to a friend. He's a trader. He doesn't do it, but he said the margin is 50,000. But it sounds like it's more like, it would make sense to me to be 50%, because that's going to be real prohibitive if it's in a nominal sense 50K. But I have not traded the futures either. I got a couple of like Bittrex and Coinbase and Kraken accounts, so I've done some cash trading in some of the basic cryptos, but there's a lot to it, and it's obviously very volatile. But who would have thought 6 years ago, looking, you know, from that vantage point in time where we are today, that we would have seen this appreciation? But
yeah, it's nuts.
Yeah.
All right. Thanks, Glenn.
Yeah.
Larry, how about you? What was the most profitable thing you traded this past year? Why do you think that was the most profitable? And if I could add to it a little bit, do you see anything changing for this upcoming year?
Yeah, so, you know, for the past year is really kind of the FANG stocks. And, you know, basically the way that trade the markets is based on price momentum is the way that, you know, our tools and our indicators work. So they've really given us some great momentum trades, like to look for breakouts. And, you know, when you look across the Amazon, and they all have pretty decent liquidity for the options, which is another thing that I want to always, you know, take into consideration. So when you look at Amazon, the liquidity is pretty decent. Google, Netflix, Facebook, Nvidia, and Apple, you know, just going back and forth through those various kind of FANG stocks have been, you know, just a good supply of good trades over and over and over and over again. So that's been working, and I don't see it changing really. And, you know, if it moves to the downside, you know, you can just trade to the downside. So it just gives you good momentum-based type trade setups.
Plenty of liquidity, right?
Yeah.
Yeah. So you think that'll remain a focus for you this upcoming year too, then?
Yeah, it's you know, it works. You know, the indicators that we use work. So, you know, keep doing the same thing until it stops working.
That's right. All right, Tony, how about you? Where did you make most of your trading profits in 2017? Why do you think that was? And anything expected to change for you as far as your trading in 2018?
Well, I think that for me, just where I was with, in my personal life and everything like that, I focused mostly on Forex because I could stick to just a handful of them and kind of, go back and forth between them. They trade technically very, very well. And, like Glenn said, I'm usually looking to hold something for a couple of hours, possibly a couple of days. I mean, even here, the Aussie dollar, for example, I've got this up here on the 60-minute time frame. We've got weakness coming into that. So I'm looking at these type of smaller setups where we've got the shift in momentum since the 28th, and we had that stronger pullback, kind of breaks that lower end of the channel facing here. So it looks like we're going to see some more corrective action on that intraday. But when we go back and we pull it up on like the daily time frame, we're only at about, halfway of this previous larger, stronger move. So can this continue higher on that daily to weekly time frame? Absolutely. But I think we're going to need a bit more corrective action here before it gets there. So I'm looking at trading these small moves, and they have just been, really incredible as far as how well they follow through. So I don't expect that's going to change into next year. I think that what we will see with the Bitcoin futures is a lot of the same thing, that it will be very similar in terms of how technically it trades. We've seen that already. When you go and look at the Bitcoin charts, it's just a very technical security. And I think that that's going to be the case going forward. I anticipate in my own trading, though, over the next year that I will get back into more of the swing trades with stocks, getting into some more of the options, playing those markets more than I have been in recent months. But Forex is kind of like my fallback right now because I can usually find something in it no matter what. And if I come in at midnight, I can find a trade. If I come in at 3 in the morning for some crazy reason, I can find a trade. So I think that's why that has appealed to me so much.
Yeah, I mean, you bring up a great point there that, your trading's got to match your personality and your ability to, your personal life. You got to be able to trade. If you can only trade on weekly charts, you probably don't want to trade Bitcoin, right?
Yeah.
But Forex is something that can trade 24 hours, like you said, or that you can trade 24 hours, like you said. Other people never want to have to worry about it at 12 o'clock at night, or never want to, they'll only look at daily levels, and so a mutual fund might be fine for them. So, you got to trade what fits your lifestyle if you want to be successful, and sounds like you're able to do that very well.
I think that's why I've shifted different vehicles so often over the years, is that I've always adjusted what I'm trading to what's going on in my life. Am I moving cross country? Then I'm going to probably be doing longer term stuff and really short term, and staying away from those middle range zones. And I think that's a big advantage for those that can trade a number of different vehicles versus just sticking to one.
Right. Right. Yeah, and you like moving cross country makes a big deal, right? You mentioned trading stocks that gap in the morning sometimes. Well, it depends what time you want to wake up, right? It's someone trading in New York that moves to California. Do you want to get up 3 hours earlier to make that trade every day, or if you're in California and you're doing that trade every day and you move to New York, can you still do it because you got to go to some other job or do some other thing at 9:30 in the morning? So yeah, lifestyle is a huge issue with trading. So I'll say for myself, the biggest profits I made this year were in trading the stock indices, and it gives choices here of ETFs, options, futures. It's all the same to me, pretty much when I trade them. I don't trade a whole lot with the options. I do a little bit, but I'll trade futures and ETFs. So I'll be trading SPY or UPRO or something like that, and I'll also be putting on futures trades in my futures account at the same time. But that's where I saw the greatest profits for myself this year. Why is it? Well, for one, it was a good year for those swing strategies that I utilize, especially from the long side. You know, I did have some short profits this year there, but I didn't take very many short trades, and it was tough to take a swing trade long and not make money in the last year, right? If you're if you put in a 2.5% stop, you never got stopped out, because that was the biggest pullback we had the entire year for the S&P 500. So, you know, was it all smarts on my part? No, and I need to recognize that and realize that, hey, maybe this year was a little better because we didn't have a you know, some event like China in the summer of 2015, or the Brexit in 2016, or something like that, where I might have been long ahead of something like that. And then the other thing that I made a fair amount of money in was my volatility trading. I was short some volatility of in and out a fair amount this year, and that turned out to be a good time to trade that. So looking forward into next year, I don't anticipate changing to all of a sudden being a Forex trader or a Bitcoin trader. I'll stick to those things I'm comfortable with and that I know, and it might be a better year, it might be a worse year, but you know, I'll stick to playing the odds, and overall I expect it should work out, and you know, not for every trade, but over the long haul. We're getting low on time here. I guess I blabbered too much. So let me just run back quickly. If you guys have a trade idea for the week that you want to share, that's great. If not, if you got something you want to let us know that might be going on at your site at ToniHansen.com or PowerCycleTrading.com or Pacific Trading Academy, feel free to let us know about that. Tony, we'll start with you. We'll just go down the list again here. Anything going on at ToniHansen.com that you want to tell us about? And is there a specific trade idea you want to share?
Sure. So I guess the biggest thing is that every Friday I do a webcast similar to this, and I look at basically every market vehicle that is majorly traded, majorly followed, and kind of do a forecast for, you know, what I'm expecting for the next week. And it combines education as well. So I explain, you know, this is what I'm looking at and this is why. So I usually start with the overall indices, move into the different Forex vehicles that are most active or have some strategies developing. And then I'll look at a lot of individual securities as well. So if there's something that is developing a nice strategy on, say, the daily or the weekly time frame as a longer term hold, we'll look at that, as well as bonds, gold, oil. So it really includes all of these different markets that are so popular. We're even looking at Bitcoin now as well. And that is every Friday at noon Eastern, and it is free. So anybody can stop in, participate. I usually put them on YouTube as well. Not always. It just, you know, depends on how fast I can get things switched on over there. But you can participate in that for free. So you can go to ToniHansen.com/focus, FOCUS. It stands for Forward Focus, which is the name of the hourly program. So yeah, go there, join us this Friday, and you'll get a bigger view on the things that I'm going to be looking at in the week ahead. So, you know, this week, for example, that Aussie dollar is one I'm looking at for weakness. That's like a kind of my core focus here today, going into tomorrow. And yeah, so my most recent one from Friday is up on YouTube, so you can go there, check out some of the other things that I'm looking at that we were examining going into the weekend. So those are all still valid here as we head into the rest of this week as well.
All right, great. Thanks, Tony. Sounds like you got some interesting things to say, so I hope some people join you this Friday. Thanks for joining us, and it was nice getting to meet you.
Yeah,
Larry, what about you? Tell us about anything going on at Power Cycle Trading.
Yeah, so
also, if you have a trade idea for the week, that'd be
Yeah, I just did a big free webinar this past Saturday on energy. So it was an area of the market that I think looks really strong, setting up for the months to come. But did a huge free webinar on that, on the fundamentals and everything. And then this Saturday, I'll be doing a big course on that. So if you want to learn more about this, go to my website, powercycletrading.com. And then you can go here, you can click where it says here, click Larry's free upcoming webinars. Well, we just did that webinar, but if you just put your name, email address in there, then we'll send you the information on the course that's coming up this Saturday. And if you want to get a free, the recording of the webinar that we did Saturday, just let us know and we'll send you that as well. So that's at powercycletrading.com. And again, we're going to do a big course on trading energy, crack spreads, MLPs, all kinds of good stuff. It'll be a lot of fun.
All right, great. I hope people join you there, Larry. Thanks for joining us. It's great getting to talk to you.
Very much.
Glenn, what about you? Pacific Trading Academy? Anything going on there that we should know about, and any specific trade idea for this week?
Hey, Glenn, you're muted.
All right, I'll give Glenn a minute to come back. I'll just say that at InvestQuant, I'm going to be having a webinar next week. I think anyone that signs up for the show today will get an invite to it, where I'll be talking about some ideas I use to swing trade, and talking about the InvestQuant Navigator, which is it's a timing newsletter that I send out on a nightly basis.
Hey, Rob. Am I back, Rob?
Yeah, you're back.
Oh, okay. So yeah, I was saying, let me see if I can share quickly. I know we're short on time, but you still here? Can you guys, you still with you?
Yeah.
Okay. Let's bring the chart up. Yeah, just kind of resonance with what Tony was saying, and it kind of illustrates the procedures that I follow. This is the daily of the Aussie USD, and one of the things I might look at, because I agree, similar, I would be biased towards preferring establishing a short position. This is the daily, so if you look at from this top here to there, you got an important Fibonacci that the market is kind of vacillating in and around. That's one level. Scale that down to an hourly, and you've got a similar but different structure. But the two patterns, one on the daily, now down to the intraday. Here's a little internal hourly wave structure. Here's your 1. Here's your 2. Here's a classic 3. And this is Fibonacci. That's about a 1.618 extension of 1, as theory indicates. And you got a nice, not perfect, but pretty decent triangular structure that tends to correlate with continuation. Your fifth wave is going to be 62% of 1 through 3, in theory at least. So let's just see where that gives you. So you can create a reward risk parameter and then pivot that off, say, the midpoint of the triangle. So that's bringing you down to a price target 78.10 area. We understand that fifth waves tend to be truncated about 65% of the time. So even if you get half of that, even if we test this bottom here, the end of the third wave, all of this is fourth wave activity. So my point is this: you've got an internal hourly structure from a wave vantage point, supportive and agreeing more or less with the broader structure that we more clearly observably see on the daily chart. Those type of things. Now, what's missing? What I do is I want to see if we have the daily and the hourly time frame kind of coming into cahoots. Do I have a corresponding time cycle that says we should be changing the type of price action from the current price action upward and a push down? If so, then I'm more inclined and I feel more confident I can attach a higher probability. So that type of thing. So thank you that you did my analysis, but I kind of had this in the wings and we're on the sync together. But that's a reason, a step-by-step type of thing I look for. Other than that, longer term, I am, as I mentioned earlier, I'm bearish the bond market, and then I took a long position in gold, GC, on the April position, longer term, given everything I look at. So those are kind of some ideas I have. Wrapping up, again, I'm with PacificTradingAcademy.com. You can check us out at the website, or you can call us at our toll-free number, 800-339-8588. What I do is I teach everything in terms of the technical approach. If it's a beginner, I provide as comprehensive a background. Even we all have the favored tools of analysis and methods and procedures that we like. What I want to present is as broad a playing field of tools and modalities that are out there, so that the the trader that's, wherever you are in your learning curve, you're going to be able to have a rationale as to why you focused in on the particular set of tools that you use. As I said earlier, the only thing I personally don't teach is the fundamental approach, not because I don't know how. I'm just not currently, my office is not set up. I don't monitor fundamentals the way I used to at the beginning of my career. But we have some of my coworkers, my other mentors, do the fundamentals. So even though I personally focus on the E-mini, the E-mini futures and Forex, the technical approach allows a breadth of instruments and options, all of the above. So that's more or less what we do. So yeah, thanks again for having me.
Yep. Thanks, Glenn. Thanks.
Sure.
Nice getting to talk to you again. You can look for me at quantifiableedges.com or investquant.com. Feel free to take a free trial at either of those sites. The Navigator is a 7-day free trial, you get, and a gold subscription at Quantifiable Edges is a 7-day free trial. And next week I'll be doing a Navigator webinar, which you can look for an invite for. Thanks, David.
All right, thanks everyone. Great show. Just want to remind everyone watching to be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Also, be sure to join us tomorrow night, January 9th, 9 p.m. Eastern Time, for the next episode of Analyze Your Trade. That'll be episode number 18, where we take trade ideas from the audience and all the guests talk about what they're seeing in the charts. AJ Brown, Stephen Place, and Dean Jenkins will be on that episode tomorrow night. Next Monday is a market holiday again, so this show, Crowd Forecast News, will be off, but we'll be back on Monday, January 22nd at 1 p.m. Eastern Time. So I just want to thank all my guests again for this week. Toni Hansen of ToniHansen.com, first time on the show, so happy to have you here. Thanks for joining us. Also, Larry Gaines of PowerCycleTrading.com, Glenn Thompson of PacificTradingAcademy.com, and Rob Hanna of InvestaQuant.com. Thanks, everyone.
Thank you.
Thank you.